Good morning. It's a pleasure to introduce South Harz Potash this morning to you. If you can move to slide 3, please. South Harz Potash is a company with assets of significant scale in central Germany. 5.3 billion tons of mineral resources is huge. We cover an area of 659 square kilometers, and we have 3 perpetual mining licenses, which are quite unique. They have no time restraints or royalty requirements, and we have 2 regular exploration licenses. The approach we intend to take to exploit our properties is fairly simple and fairly straightforward. It's not complicated at all. And we're supplying into a growing market, and in Europe there is a deficit of supply over demand which we can exploit. Germany itself is a highly attractive location, and I'll talk to that through the presentation. Moving on to slide 4, please. This is a map of the South Harz region where we operate. The dark green dotted line represents the potash basin, and you can see the land holding we have highlighted here in the various colours is fairly dominant in the area. The grey areas to the north are the old mined out areas that were mined during the East German period over some 100 years. In the very top right hand corner you can see the Omgeberger area, and top left-hand corner, that is the siting of our first project. You can see it's the smallest of our properties, but in some ways the most prospective and easiest to develop. Moving on, please, to slide number 7. The markets themselves are in a very interesting position. The underlying thesis has always been that potash demand will increase as the world's population increases, as the world's diet improves, and as finite arable land becomes exhausted, requiring additional yield from crops. That's all still true, but of course it's been dramatically affected by the geopolitics of the last few months with conflict in Europe, and purchasers of the commodity are looking at the strategic nature of potash in the food security debate, and that's, I think, causing a structural shift in the price upwards that's not going to reverse in the short term. So you can see historically the price has sort of hovered around the $200 to $300 level. I think that history, if you like, is going to be reset going forwards to our advantage. Moving on to the next slide, please. The Omgeberger project is the first of our projects. It is a down dip of the old mines, as I mentioned earlier. It is also on the silvernite horizon, which is the preferred ore, and it is the first taxi out the ranks, so to speak, in terms of exploiting the large land position we have in the area. The highlights of the Omgeberger project are, of course, that it has a low carbon footprint. It'll be an underground mine with very little on surface, and we can come to the environmental credentials on a later slide. It's in an area with a strong potash mining history, which is important to us, and these rights are perpetual with no royalties thereon. So that makes them financially very attractive as well. It's a shallow deposit, thick, simple, well understood mineralogy, been mined for many years. Moving on, please, to the next slide. We've numbered the different projects here on that map, and the Omgeberger project is the first taxi out the rank, as I mentioned earlier. We have some 300 boreholes across those properties that we inherited with the mineral rights when we acquired them. And you can see the Omgeberger property in the bottom left-hand corner is actually the smallest of the properties. And you can see the size of the others by comparison. So we're starting out with the smallest and most prospective, but it's by no means the cream of the crop. There is more to come in the future. Moving on, please. When we acquired the mineral rights, we inherited some 300 borehole results with the properties. And to put that in context, each one of these holes costs about 2.5 to 3 million euros to replace. So it's a fairly important inheritance in terms of financial value. We did not, however, have the core from those boreholes. And to get a competent person to upgrade the inferred resource to indicated, we needed to do some parallel drilling, some confirmatory drilling. We've done that during the first part of this year, and some 89% of the silvernite seam at Omgeberger has been upgraded to indicated as a result of drilling just 2 holes. So you can see that the leverage, if you like, from being able to do small amounts of drilling to extrapolate those results to the other holes, it gives us a significant uplift in geological data for very little investment, effectively. And that, I think, was good value for money. Moving on, please. So the Onkaburger project itself, the physical outcomes from it are that we are planning in our scoping study to mine 1 million tonnes per month of potash. That comes from 4 hoisted ore, and also gives us 2 million tonnes of salt, 1 million tonnes of which is saleable. It gives us a 21-year mine life with a 3.6-year payback. And down the right-hand side of the page, you can see some of the salient physical attributes of the property. About 60% of the product will be granular, 40% will be standard grade MOP, as they call it, and we'll probably sell about 75% into the European market, with 25% going to exports during the off-season. Moving on, please. So, as we evaluate this first project, we have completed the initial scoping study work high standard. It's based on what we believe are realistic and sensible assumptions, and it shows a fairly compelling financial outcome, which I'll come to on a later slide. The funding of the project is something that obviously now is available, and this study gives us the first hard data to enable us to go and discuss with various strategic investors and with potential funding partners how the project might be funded going forward. Included in that, of course, is the possibility of an AIM listing at some point in the future. Royalty streams and offtake contracts and all those things are fully available to the company to finance the project going forward. So we have a complete array of options in terms of how the project is funded in the long term. As regards the development itself, it's all pretty straightforward. We believe we can fast track the development and complete it in 2 years post permitting, again, which I'll come back to. Moving on, please. Financial results of the scoping study were fairly robust at a potash price of $385 per tonne, which compares to the current spot price of around $850 a tonne. So we're coming out with a net present value of around just less than $1.3 billion. And an IRR of 26%. So a fairly sort of compelling set of financial outcomes. The cash operating cost of the project comes out net of byproduct credits at around $93 a tonne, and that's fairly near the bottom end of the cost curve. The cost of the project build is $620 million, which is not insubstantial, but by potash standards, it's actually extremely competitive. We did run the net present value, obviously, at a range of other numbers. And the net present value at the spot price at the time the scoping study was released of $900 per tonne came out at 4.2 billion, so pretty high numbers. There is an alternative case that we are evaluating where we actually build the mine in 2 500 million tonne slugs rather than going for the 1 million tonne in one go, and that comes out with a peak financing of $443 million. So there is a way to moderate the capital requirement if necessary. Moving on, please. Being based in Germany, of course, the environmental focus is paramount, and the obligations that we are going to have to comply with are extremely strict. There are 2 undertakings we've given, which are really important to understand. One is that we will develop this mine with no permanent waste piles on surface, and the second obligation we have is that there will be no industrial water discharges into groundwater and into rivers, etc. We are able to give those promises because of the mining and processing approach we have selected. Mining will be through room and pillar approach and on take-out pillars and substitute that with backfill, and that will mean that all the waste we produce on surface can go back underground. In terms of water discharges, the processing approach we've taken there does not produce large volumes of brine. It enables us to it's a leaching process followed by a crystallization process, which is not water-based specifically. Therefore, any brine that is produced can go back underground with the waste stockpiles. So there'll be no tailings on surface and all that sort of thing. So those 2 undertakings are extremely important in terms of permitting. We specifically designed the approach to exploiting these assets on the basis that we can meet those two obligations. Moving on, please, to the next slide. As you will expect, the social commitments in any area are of paramount importance, but they're particularly important to us in the South Harz area of Germany. As I mentioned earlier, mining has taken place in this region for some 100 years, and the mines that were there on reunification in Germany were largely underinvested and overmanned and not economic at that time, and were closed by the combined new German government. That created some resentment and some pushback by the local inhabitants in the South Harz region, and indeed there were strikes and there were hunger strikes and protests and such like at the time. And the local population felt very strongly that the mines themselves did have a future and should be invested in, and that there was plenty of potash to be mined. But at the time, the new German government of the combined West decided not to go down that route. So there was a lot of resentment, if you like, at the time from the local population as regards the decisions that were taken. So as we look to revitalise mining in the area, we need to be conscious of that history. And we found that there is generally a fertile ground for conversations around reactivating mining, because it gives the locals a chance to say, we told you so, look, there's now a foreign company that can do what we told you could be done all those years ago. So that there is a good level of support for mining in the area generally. And there are lots of people that have mining in the history of their families in the area. Moving on, please. So the all-important delivery pathway, this is basically the next 5 years and the work we have cut out in front of us. The first step is to finalise the site selection and to complete the pre-feas study, which will take us around 18 months. In parallel with that, we'll complete the environmental study that's required to inform the full feasibility study, which is detailed on the next line, which will take us 2.5 years to complete. Those work streams have been designed and dovetailed to the permitting process, which we can commence in 6 months' time and takes in total about 2.5 years. It's done in stages. The first stage is to approve the site. The second stage is to improve the mine operating plan. And effectively, at the end of that 2.5 year period, you get your permission to go ahead and build the mine, which gives us the last line on the chart, which means we can start building around the back end of financial year 2025, and it's a 2-year build process. So it's a fairly straightforward program of work, and we're already enthusiastically engaged upon that. Next slide, please. So last but not least, we just want to draw attention to the series of taxes that may come out the rank over future years. This is obviously a long-term prognosis. The Umgebirge project itself has already been initiated. It's got an 18-month PFS process, which has been approved by the board. We will explore synergies with our neighbours in the region, which may improve the prospects of the study itself. And we're in the process of building our team so that we have the capacity to deliver. But thereafter, there are future projects which, over passage of time and leveraging the 300 boreholes of data we already have, can be a key differentiating factor in showing us as a company that has several projects, and we're not a one-trick pony. And we can develop those assets into the growing market as the deficit of supply and demand in Europe increases going forward. Thank you very much.
Thanks, Ian. Bang on time, and thank you for your time. Now, a couple of questions here. Murate of potash, MOP, which is what you're producing, does it compete with sulfated potash? And obviously, sulfated potash doesn't contain chloride or salt. So how do you see them sitting together in what's obviously a very big market, given BHP has entered into this market in a major way as well?
SOP is a very small market compared to MOP. In rough numbers, the MOP market is about 70 million tonnes globally, whereas SOP is only 7. So MOP is a large, global, deep marketplace that's globally traded, so it's a much better place to be from a marketing point of view. MOP is simpler to produce. It doesn't have the technical complications that SOP has. Both the extraction and the processing thereof is all tried and tested and doesn't have any complications in terms of process type. And MOP is used primarily on things like wheat, corn, soybeans, the sort of major large cereal crops, which is why it's such a big and deep market. Whereas SOP is used more in sort of the niche products like certain exotic fruits, tobacco, that kind of thing. So MOP is definitely the place to be because it's simpler, it's a bigger market, it's global, and indeed it's more widely used.
And given the geopolitical risks which have supported the MOP price, but obviously in somewhere like Germany, the power prices are through the roof. You've got droughts impacting water supply and power generations as well. Have you kind of modelled the rising energy costs into your scenario?
Yes, that was quite a difficult decision to take. The scoping study, as released, obviously contains energy prices in there. The prices we used were driven by long-term futures energy prices in Europe as quoted at the time, so they were sensible. There were some 30% above historical averages, but of course the issue in Europe right now is at crisis levels, and predicting what prices will be 5 years out is extremely difficult. So we have allowed funds in the PFS stage of our study to do a complete review of sources of energy. Obviously, the environmental impact of energy choices is something we want to look at very closely as well. So we've taken a sensible approach to the number we used in the long-term model, but clearly it is one of the factors that is a bit up in the air right now, quite frankly. And I think it's going to take a few years before that issue settles down and you can make better informed decisions than we can at the moment.
And just finally and quickly, in regards to CapEx, what sort of numbers are we talking, and what does a strategic partner look like, or an offtake partner?
The capital for the first of our projects is estimated to be $620 million. That includes $95 million of contingency. These are US dollars. That, by comparison to sort of industrial norms, is about 60% or so of what you would expect on a global average potash project. And the reason it's comparatively low is that we don't require any infrastructure really for this project, because we have road, rail, water, and power, as you've already mentioned, on our doorstep already, because this is an area that historically has produced for many years. So it's capital-wise extremely efficient versus industry averages, but nevertheless it's quite a chunky number for a small company like ours. As regards strategic investors, we have an open shareholder register. We have no commitments in terms of any offtake royalties or any other such instruments. So we have the full array of possible financing options ahead of us. And as I mentioned earlier, now that we have some hard data from the scoping study, we can explore those options, and we'll do that over the next 2.5 year period. Ideally for us, a strategic partner would be a financially interested party that's prepared to come in at the ground floor while our share price is very low. And of course, as we add some granularity and detail to our project study, and we take it from scoping study through to PFS, to DFS, etc., there's a lot of prospects of increases in share multiple significant. So finding a financial partner, if you like, that's prepared to join us on that journey and to fund its corner, if you like, for the fundraise over the sort of 18 months to 2.5 years will be very important.
And thanks for your time. Just got a couple of internet issues at the end, but thank you for your time. We'll follow the story with interest. Have a nice weekend.
Thank you very much.